So the latest consumer price index report shows inflation cooled in March for the 9th month in a row.
Finally, some good news. But still, prices remain higher than average across the U.S. Inflation climbed to 5% last month from the year prior. That's a little bit lower than expectations, and it's also down a full percentage point from the annual increase seen in February.
Additionally, prices only ticked up by 0.1% from February to March, as compared to 0.4% the month prior. You're staying with us? Well, don't worry about it, because we have CBS News reporter Sarah Ewall-Wice joining us to break it all down. So, Sarah, the new CPI report shows the smallest 12-month increase in almost 2 years, but costs are still much higher than the target rate of 2% the Federal Reserve's aiming to reach. So what do you make of this latest data?
Well, you know, when you look at these numbers in comparison to what we've been seeing over the past year, they are good numbers. But like you said, inflation does remain too high. And you talked about those headline figures. But when you talk about core inflation, that's the number not including the often volatile energy and food prices. Those have been much more persistent. When it comes to core inflation, prices are up 5.6% from a year ago. And that annual number was actually 5.5% in February, so that ticked up slightly. The main driver of monthly increases is actually shelter costs, which is a large part of people's budgets. And even though increases have cooled some last month from February, housing and rent are still up more than 8% year over year. Also, transportation costs are remaining relatively high. Things like motor vehicle insurance and also other car-related services are up. So that's one thing to keep in mind. Another piece of bad news ahead of vacation season, airline fares are up 4% last month, and those are actually up more than 17% from a year ago. I know people are about to head off in the next couple of months on some summer vacations, so that's one piece of news that I unfortunately have to bring you as well.
Oh, well, it is good news, though, overall, that the rate of inflation is decreasing. However, it doesn't mean that prices are actually decreasing, just that they're not getting more expensive in quite as rapid a pace as they were. But I'm wondering, Sarah, are there any things that are positive in terms of prices decreasing in any areas that you see?
Yes, I'm glad you bring that up, because I do want to bring some good news to folks. And this is that there are decreases when it comes to energy and food costs. Energy prices were down last month in every single category, including gas, down 4.6%. The cost of gas is down 17% from a year ago. Current average for a gallon of gas, according to AAA, is $3.61 nationally. The other good news relates to food prices, and this is something everyone has to deal with. The cost of groceries still up 8.4% from a year ago, but the price of food at home actually fell 0.3% last month. And this is the first decline in grocery prices since September 2020. Prices dropped in 3 of the 6 major food groups, including meat, dairy, fruits, and vegetables. And, you know, the price of eggs, we've been talking about that, has had a bumpy ride. That's down more than 10% last month alone.
That is some good news.
And in our last few seconds, Sarah, to what extent do you believe this new report, with its mixed info, could impact the Federal Reserve's next decision on interest rate hikes? I think that's coming in about 3 weeks, and the expectation is a 1/4 percentage point, but maybe that will change.
You know, it's really tough to say exactly how this will play into that decision by the Fed, because there are several other pieces of data that they have to look at before that next meeting in early May. There already have been 9 interest rate hikes in the past year, and they do have a projection of at least 1 more interest rate hike this year. So we could see, as you mentioned, that 1/4 percentage point hike at the next meeting. The current federal funds rate is between 4.75 and 5%. But there was a strong jobs report on Friday. There was cooling, but 236,000 jobs were added. So they're looking at that. There are also the factors of the bank failures that we recently saw. Federal officials are keeping a very close watch on that and whether that's impacted credit tightening. Treasury Secretary Janet Yellen said she has not seen signs of that just yet, but it is a possibility. So that is something officials are keeping a close eye on moving forward before they have this next meeting, which is when they'll make the actual decision on the hike.
And we appreciate you keeping a close eye on all of it as well. Sarah Ewall-Wice, thanks.
Thanks, Sarah.
Thank you.